Hello. In this video, we will be covering research and development costs and the accounting for those costs. First, we'll go through what is research and development, commonly known as R&D. So many companies invest in research and development to find new and innovative products for their companies to either use or sell. The most common places that you'll see R&D, and not to say that's the only places, but tech companies and pharmaceutical companies invest a lot in R&D. And the research part of it is the planned search or investigation to discover new knowledge. Okay, it's a search to discover new knowledge for a new product or service or technique that is improves an existing product or process, or it's for a new process. The development part of it is once the research is complete, is seeing if the research can be developed into an actual product or process, right? So this is the research part of it, and this is can we make this happen into a product or process. And tech companies, think of like Google, which is actually Alphabet, and AbbVie, all these big Merck, all these big pharmaceutical companies, they invest a lot of money into research and development. So the question is, what costs are actually included in R&D? And it's really important to distinguish between what costs are R&D and not, because R&D costs are expensed on the income statement. They are not capitalized, and it's really controversial because they're expensed. A lot of these big tech and pharma companies, it really reduces their net income by a lot. I mean, they will spend millions and millions of dollars on R&D and really decreases their net income, their profitability. And the reason it is expensed is because in order for an asset to be capitalized, think of the definition of an asset is that it generates future benefit. And when you have R&D, these research and development projects, they might generate future benefits, but they might not. There's a lot of projects that are left, on the table because as they get into the details, they're just not feasible for one reason or another. But because of that, because you don't know which R&D costs will provide future benefit or not, GAAP says that R&D costs must be expensed on the income statement. So let's talk about which costs are considered to be R&D and therefore expensed. Any salaries and wages and other labor costs of R&D personnel. Any cost of material consumed, or let me just erase that. Or any cost of the materials consumed and equipment used, facilities, and intangibles used in the R&D projects are expenses R&D. Any cost of services performed by others. So if a company hires a consulting company to do some R&D on their behalf, those costs are considered to be R&D. And also a reasonable allocation of indirect costs related to R&D activities. Let's quickly highlight just what is the indirect costs. It's really the indirect costs are expenses that support the R&D activities, but not directly tied to specific projects. So think of it of the utilities used in the R&D facilities, depreciation on assets used specifically for R&D, rent on the R&D building, insurance for R&D building equipment, any repairs on the buildings that are used for R&D, any property taxes on the R&D facilities. Those are all indirect costs related to the R&D activities, and those are all considered R&D and expensed as such. So quickly, I mentioned that one of the indirect costs related to R&D activities is depreciation. And so what happens is when you have an asset that is solely purchased for an R&D project, and it will only be used in the R&D project and will not be used for any other purpose, then that cost is considered R&D and expensed immediately in the year that was purchased. However, if an asset, right, like a that is depreciable or amortizable, has a future use beyond the current R&D project, then those costs are capitalized to the balance sheet, and they're depreciated or amortized as long as they're used as R&D. The depreciation goes into the R&D bucket, and then after once they're used for projects that are not for R&D, then the depreciation is expensed under depreciation expense. But so it's either classified as R&D or depreciation, but they're calculated exactly the same. Here's a kind of a timeline of costs that are expensed as R&D versus costs that are not expensed as R&D. And really the differential is this like dotted line, and anything that is in the research and development phase is expensed. Once you have start of commercial production, and that's really the key, once production has started, then those costs are they're not considered R&D. They still might be expensed, but they won't be expensed as R&D. So let's go through examples of cost expenses R&D. Any lab research aimed at discovery of new knowledge. Again, this is before the start of any sort of commercial production. Searching for applications of new research. Any design, construction, and testing of pre-production prototypes. So notice it says pre-production. Any modification or formulation or design of a product or process. Here's examples of not recorded as R&D. So that does mean it could be an expense, but not as an R&D expense. If you have engineering follow-through in an early phase of commercial production. So even though it's early phase, it's still in commercial, it is not R&D. Quality control during commercial production, including routine testing of products. Again, during commercial production, so it's after the start of production, so it's not R&D. Routine ongoing efforts to refine, enrich, or otherwise improve on the qualities of an existing product. So that's not R&D, although it will be expensed. And adaptation of an existing capability to a particular requirement or customer needs as a part of a continuing commercial activity. Again, after commercial has actually started, not considered to be R&D. So let's take an example and go through of what would be considered to be research and development costs and what would be expenses R&D versus maybe not expensed. So here we have a company that made the following cash expenditures during 2027 related to the development of a new industrial plastic. So we're told this is in the development phase. R&D salaries, that's going to be R&D cost. R&D supplies consumed during 2027, that will be considered to be R&D. Purchase of R&D equipment, well, if we purchased it only for R&D, then it will be expensed. However, if there's future benefit outside of the R&D project, then it might be capitalized. So we don't have enough information yet. And patent filing and legal costs, we'll get to that. And payments to others for services in connection with R&D activities. Yes, that is going to be R&D. So let's see what else it tells us. It tells us that the project resulted in a new product to be manufactured in 2028, which is the following year. A patent was filed with the U.S. Patent Office. Amortization of the PANS filing and legal costs will begin in 2028. The equipment purchased will be employed in other R&D projects, and depreciation on the equipment for 2027 was $500,000. So let's see how what we record as R&D expense, and exactly what I said, the salaries, the supplies, and payments for others is considered pure R&D expense. So we're going to debit R&D expense, credit cash for $14.2 million. Let's look at that equipment. The purchase of the R&D equipment, while the equipment purchase will be employed in other projects. It didn't say other R&D projects, just it's going to be used in other uses. So we're going to capitalize that equipment. So we're going to debit $5 million to equipment and credit cash for $5 million. And then the depreciation, it tells us the depreciation on the equipment was $500,000 for the year for 2027. Normally, we would debit depreciation expense and credit accumulated depreciation for $500,000, but because that asset is used in this specific R&D project during the entire year, we're going to debit R&D expense for the $500,000 rather than debiting depreciation expense. We're still going to credit accumulated depreciation for the $500,000 just as we normally would. Let's continue with the next cost. Let's talk about this PAN filing and legal cost. The PANs are not expensed as R&D, but rather they are capitalized to the balance sheet and then amortized. And they're capitalized as an intangible asset because they relate to securing a legal right, not necessarily the research and development of the activity itself. And US GAAP says that the cost of obtaining a patent, like the legal fees, registration fees, and any sort of related costs, are not expensed as part of R&D, but they should be capitalized. So that's why the PANs are going to be capitalized debit PAN, and that's going to be a long-term asset on your balance sheet, and credit cash. So let's just look at the total expenditure reconciliation here, that this 19.3 million. So we said 14.2 is going to be R&D expense, 5 million is going to be capitalized as equipment, and $100,000 is going to be capitalized as PANs to get to the full 19.3.